Hello and welcome to the webinar, Sell More Pools with Financing. I'm Scott Webb, editor of Aqua Magazine, and today we have with us Greg Powell, president of Viking Capital, and Sarah Bess, director of business development. Kevin McCall, vice president, intended to be here but was called away by an important family matter at the last minute. Greg has been in the home improvement and finance arena for over 30 years. He began in marketing for Sears Home Improvements and then transitioned to finance in 1994 when he started at Green Tree Financial. Green Tree eventually became General Electric, and after 5 years as GE's top producer, Greg left in 1999 to start Viking Capital, which has grown rapidly under his direction. Sarah Bess has been with Viking Capital since 2022 and has 9 years experience specifically in the swimming pool and home improvement financing area. She leads the business development division, and her team of 4 account managers strive to provide all our contractor partners with excellent service and communication. Before we get started, I wanted to add that there is a box for questions during the presentation. Please submit those, and we'll try to either answer them live at the end or directly by email after the webinar. So without further ado, we've got a lot to cover, so let's get started. Sarah?
Perfect. Thank you so much, Scott. And thank you everyone for registering for this webinar today. Full disclosure, I have a little cold. Under the weather. So if you see me sip my tea or cough a little bit, I'm just going to apologize in advance. Kids go back to school from holiday break and bring all kinds of goodies back for us. So excuse me if I don't sound my best, but we are so excited to have you guys here and look forward to talking to you all about pool financing. It's a great time of year. It's a new year. There's a lot of exciting things going on in the industry and in the financing space. So we'd love to go over a little bit more about that with you all today, be a resource for you, and then love to connect after the webinar as well and help you any way we can. So let's get started. With this webinar, we want to be a resource to you all, help educate you on pool financing. And before we get into any tips or tricks or, hey, how to do this better, first we got to go over the basics. Some of you may use financing often. Some of you may not use it at all. You're interested in offering financing. So let's go over some of the basics so that way you understand what exactly it is to finance a pool. So that way you better understand it for your customers and the benefits of it. When we look at pool financing and what exactly that is, most people automatically assume, and I'm talking about homeowners, consumers, that if they want to purchase a pool, that they're going to have to come up with a way to pay for it. Many consumers, in my experience, either have the cash or they have to borrow it somehow. And if they have to borrow it, they automatically assume they need to go to their local bank or they need to refinance their home. They're not actually aware that there is specifically pool financing available. So let's talk a little bit about a pool loan and how it differs from, say, a traditional personal loan with a bank or credit union. With swimming pool loans, they are catered to these types of projects that are on average costing anywhere between $70,000 up towards to $200,000, depending on your market. Swimming pool loans offer terms up to 20 years, giving the customer up to 20 years or 240 months to pay off the loan. These loans typically offer amounts up to $200,000, so that way the customer can finance the pool as well as any additional extras, spa, water feature, landscaping, any other backyard improvements they may want. Interest rates are going to vary, of course, based on credit score. Right now in the industry, we're seeing rates that are going to range anywhere between the 8 to 14% range for these loans. And those rates are on par with industry standard. And that is because these loans are unsecured. That means there's no collateral involved to secure the loan to the property. Most times, if a customer is looking for a pool loan, they go to their bank or their credit union. Most of those lenders are going to want to collateralize the loan at some point. They're going to want to either do a refinance of their first mortgage, do a home equity line, use some sort of collateral to tie that loan to the property. Most pool loans are unsecured, so there is no collateral involved. There's no extra red tape that your consumer has to go through. It's a loan given solely based off their credit score and their income. Those are the two main factors behind it. So with these pool loans offering these long terms, these high loan amounts, it's a great way for your customer to get approved pretty quickly and give them the buying power to go ahead and sign a contract and commit to a design and a price with you, the pool company. Most swimming pool loans, how they work is they are called what we consider staged funding. With many traditional lenders in the pool financing space now, that is how they operate. Customer applies, they are approved for the loan, and then you, the pool company, are paid in stages throughout construction by that finance company, just to make sure that you are getting paid as work is performed, and also that way the loan is protected. In some cases, if a consumer gets a couple $100,000, they get approved, hits their bank account next day. Sometimes we see a little bit of buyer remorse. Consumers may take that money and go do something else with it. They may back out of the pool contract. Traditionally speaking, most pool financing companies now are staged funding lenders, ultimately to provide you the best options available. So that way the funds are used for that project. You're protected and your customer's protected too. In terms of what can be financed, obviously this webinar is entitled Pool Financing. So most of what we finance is new in-ground pool construction. However, we can finance a wide variety of projects that many of you probably do on a day-to-day basis. We can finance pool renovations or remodels. That has become quite popular, and we're seeing a lot of requests for that now. Whether it be a simple replaster or interior finish upgrade, or it be a complete demo where you're also adding a spa or a tanning ledge. We can finance pool remodels. We can finance outdoor living. So that could be an already established pool and you're looking to add additional paver patio, outdoor kitchen, pergola. We can finance that as well. Spas, above ground pools, hot tubs, really anything related to the pool or the home, we can finance. We can even finance interior home improvements if the customer requests. So when partnering with a pool financing company, you want to partner with someone who's going to cater to all the services and products that you offer. So that way your customers have the most buying power that works best for your business. And with the financing partner, and why it's important to shop around and find one that works best for you, is because ultimately your financing partner is an extension of you. They are a tool that you use to help your customers close contracts, get projects done, and ultimately help your bottom line and your profit margin. So when you're looking for a financing partner, we'll talk a little bit more later about benefits and what you need to look for. But when you are looking for a partner, you want to find someone who's ultimately going to work for you, take care of your customers, and take care of you and your staff. So that's the basics of pool financing, the loans themselves, and also financing in general and how pool financing companies operate. Next, I'd like to talk a little bit more and have Greg Powell, our president, share a little bit more about current market conditions for the pool industry. If you've been in the industry for the last 5 to 7 years, you've seen pre-COVID, you've seen COVID, now we're in post-COVID. I'd like for Greg to share a little bit more about his experience in the pool industry, what we're seeing currently, and what we potentially forecast for the next couple of years, just to make you guys aware of what we're seeing on the financing side of things. Greg?
Thanks, Sarah. Yeah. Just want to go over a little bit of kind of rate trends, historical where the rates have been for swimming pool loans, things like that. So you have an idea. No, nobody's got a real crystal ball as to where rates are going, but I think we have a pretty good idea. I would say, uh, we had a long period where rates were so low. Mortgages were 2.5% and 3%, and that was that was great. And these loans were at 4.5% and 5%. They typically run, I'd say, 1% to 2% over what you see for a traditional first mortgage. If first mortgages are at 7, usually the low rates on these are around between 8 and 9. But what that did, that long period, I use the term, it basically cemented over all of those first mortgages. So there, now you've got rates back up in 6 or 7%. So you've got a huge percentage of the homeowning population out there who can't really, I mean, it would be financial malpractice to refinance a first mortgage that they've got at 3% to take out money for a home improvement. They can look at equity lines and equity loans, and those things are there if they've got the equity in the property. But for most, a big percentage of these people, they're fairly new homeowners. They haven't really built up the equity to get that, be able to take enough out of there to do a project like this. So they're looking at kind of non-traditional types of financing, which is where we fall in. These lenders are specific to this. I think you've got, rates are in that, like Sarah said, kind of that eight to 14 now. Um, and I wouldn't expect to see anything dramatic one way or the other. I know there's a lot of talk about trying to get the Fed to drop interest rates. When you think about it, even when they do drop them, it's only about 0.25%. And 0.25% isn't going to do much to any of this stuff. And these rates don't move, hourly like first mortgage rates do. So if these lenders would probably absorb 1, 2, 3 Fed rate breaks before they would even go through and change all of their rates. And if they did, you're talking minimal on monthly payments anyway. So I would kind of assume that we are where we are for this year. Rates are where they are. Um, the good news is the loan limits on these types of things continue to increase with the price of these pools. Where 5, 6 years ago, there was no way anybody was getting $175,000 unsecured loan without verifying income. That just didn't exist. As these prices have gotten higher and higher, these loans perform traditionally very, very well. Uh, and they're starting to just get a little more and more aggressive. There's a lot of AI coming into underwriting decisions. There's a lot of ways to verify things without paperwork. So um, you can take an application on one day and they're done a day or two later. Um, I think as the demand for pools has slowed down post COVID, it's more important than ever than that you actually actively talk about financing. The pitfall you're trying to avoid is customers kind of going and poking around on their own and finding out they can't get a loan. If they go to their bank and their bank offers a 5 or 7 year repayment term, and they see some $4,000 payment, they may just think that that's the end of it and be done. Where they don't, unless they start poking around on the internet and they find us or somebody like us by accident, um, they kind of think their banker told them that they're done. And as more and more of these people are unable to tap into equity, they're unable to refi and take cash out. Um, Banks and credit unions are difficult. Um, Options that we offer compare better and better as as time goes on. So I think it's important that if you can get them into the hands of somebody like us, the sooner in the process, the better. One, so you don't spend a lot of time, working on somebody that's a 450 credit score. And also you kind of have an idea of what they can be approved for. We'll get to that a little bit more, but I would say I wouldn't wait on rates to drop to do anything that would affect your business. But I think as pool demand has slowed down, it's like selling cars. The more you can get a payment number into their head, uh, the better. I think that's very important right now. Sarah.
Yeah, no, that completely agree. And that makes sense. So thank you so much for sharing, Greg. And that's a great segue to the next slide. And the next topic is talking about selling financing to your customers or just simply offering financing to your customers. Um, I believe that raising awareness and making your customers aware that you offer financing is absolutely one of the best things that you can do. Whether it's your business model to passively offer financing, or you tell every single customer, the same thing every single time, just raising awareness to it is a great tool. There was a study the PHTA did a few years ago, and it said that of half of the pool buyers that they polled, half of them did not know that financing was available for pools. So just raising awareness to the fact that financing available is the first step and the best way that you can do that. Um, there are many ways to what I call passively promote financing. The first thing is to put it on your website. Create a financing tab on your website if you have one, or create financing posts on social media. From a marketing perspective, listing financing on your website is a great marketing tool. Say, for example, the average consumer, they're online, they're looking up pool companies in their area. Pool company A has no financing. Pool company B has no financing. Pool company C lists financing. More consumers are probably going to call pool company C because they seem like they have resources. They're not just a pool builder, they have finance vendors, they have options for me. So it's a great way to capture more clients who may never even call you until they look on your website and see that you have that available. Another great way to passively promote financing is in your email communications. Say you have a design appointment with a customer, you are going out to their home, you send a appointment confirmation email. Include in the email, hey, before I come out next Tuesday at 3, we do have several financing sources if you're interested in financing. Here are the links where you can apply and go ahead and get a pre-approval prior to me coming out to see you Tuesday. If you have any questions, give me a call or give these folks a call. Here's their contact information. That's another great way to passively promote financing because you're raising awareness to it to your consumer, and they'll either reply back and say, no, I don't need it, I'm going to pay cash. Or they'll come back and say, hey, I didn't even know that was an option. I'll check that out now and I'll let you know how it goes. That way you kind of almost pre-qualify your customer, what their buying power is, if they're going to have to be a finance customer, if they're going to be a cash customer, and can take the appointment from there. Encouraging the customer to apply and get a pre-approval is a very important thing, I think, as you want to maximize the opportunities that we have. As Greg said, some demand has slowed down in many areas of the country. We kind of hear it from all over from our pool partners. So if your customer, says that they're interested, they want to apply, go ahead and encourage them to get a pre-approval. Every finance company works different with how their process works. With us at Viking, when a client applies for financing, we'll perform a soft credit check only and usually call them within a few hours, and we'll go over rates, terms, monthly payment upfront with the customer. This is based solely off of soft credit check. So, like most customers, if they're very cognizant of their credit, they don't want multiple credit inquiries. This is a great way to find out firm numbers, rates, terms, and set realistic expectations with them before you go to the home. So I would encourage them to apply and obtain a pre-approval prior to meeting them and going over design and layout and meeting the client, if possible, just so that way you understand the customer's buying power, and you'll realize pretty quick if you're working with a viable customer or if they don't have options at that time. So passively promoting financing, offering it on your website, offering it in your emails, your text communications for booking appointments. That's a great way to what I call passively promote financing. And then if you want to focus more on selling financing, there's a couple of different tips too that I would recommend that you use when speaking with your clients. If you're sitting down with a customer and they say, all right, Mr. Customer, here's the budget. We're looking pool, spa, everything all in, say $90,000. You say, listen, and the customer says, oh, that price is high. I wasn't expecting it to be that. One objection you can overcome is saying, hey, I understand, unfortunately, with the cost of materials, tariffs, things that we are seeing now, these are the average prices of pools in your area. We do have several financing vendors that we work with. So instead of, say, $90,000, with their financing options, your monthly payments could be anywhere between $750 to $900 a month. And you make those payments and pay it off early. That's one way you can kind of, I would say, flip the narrative, so to speak. So that way, instead of the consumer focusing on that bottom line, they are now focusing on a payment. And most consumers with with the market nowadays, seven, eight, $900 a month payments, for a price that high of a pool, that's nothing. That's comparable to most car payments nowadays. If anyone's had to buy a car recently, you know what I'm talking about. With the way interest rates are and just the cost of goods, that's a pretty normal payment for most consumers nowadays. And they can say, oh, wow, that makes sense. That's even cheaper than the car I was thinking about getting. And now you're turning that customer into a payment buyer. At that point, when they're starting to focus on payment, then they can say, well, technically, I can afford, $1,000, $1,200 a month payment. What else can we add so that way I know I'm still in my budget, but getting exactly what we want? Now you've taken that opportunity and turned it into upselling. So now you can go over additional options with your customer, additional features, upgrades, things that are going to increase the cost of that contract and therefore your profitability. One thing I do recommend is, although you want to talk about payments and give enough information to your customer, you also don't want to misquote them, because then the customer is going to, potentially, have the wrong idea. You don't want to tell customers, oh yeah, interest rates are like 3%. Go ahead and apply. You'll get approved. You don't want to misquote the customer. So you want to be educated enough on what's going on in the industry. I always, again, go back to that pre-qualification. Say, Mr. Customer, it's your credit, it's your business. From what I understand, here's the estimated monthly payments based on the cost we're looking at. But I would highly encourage you to go ahead. It's a soft credit check only. See what you can apply for. Let's get some numbers together, get a budget together, and then we'll work with you on that. Because it could be the opposite. You could have a customer with not so great credit who is maybe potentially struggling to find financing options. We at Viking have options for all types of credit customers. That customer could apply. We have them approved for a certain amount. You can then go back to the drawing board and work on a budget pool that's going to best meet their needs, but still be profitable and still be a good option for your company. All right, and Charlie just sent a chat message. If you all have any questions, we are happy to address them during the webinar. So feel free to put them in the chat screen so that way we can go over those and address those either here on the webinar or after the webinar. We're happy to help you all. Greg, anything you want to add for the selling versus offering financing piece?
Yeah, I do. I just wanted to mention that something that sets us apart a little bit is you can, in most cases, not every time, but you can, in most cases, get real-time approvals days, nights, most weekends. Our loan specialists are sort of on call. So there's 5 or 6 of them, depending on the time, and different time zones. So if you were to be in somebody's home on a Saturday afternoon or a Wednesday evening, if you call, they'll see that the phone is ringing. And if they pick it up, if they're not terribly busy, they'll generally pick it up because they'd like to get that loan and they'd like to put it together and get paid on it. So you can, and the way it works now is you could call in, get one of our loan officers. They can walk them through the short credit app, explain to them how there's no hit to their credit, walk them through the quick app, takes them, 5-10 minutes to go through that. They'll have the soft credit pull in front of them. They'll know what's what. They can have some conversations about payments, loan limits, etc. They've got a number of different lenders behind them to choose from. And if the customer, if they, say for instance, say there's a one lender that just stands out as the obvious choice, the lowest rate, easiest for them, they can submit it on the spot through that through that lender's underwriting process and have an actual approval while they're still speaking to your customer on the phone. So you can call them up at 7 o'clock at night, and by 7:15, 7:30, that customer can have an actual approval, knowing what their loan conditions are, their exact payment, what the loans, all the details of it, um, kind of on the spot, which is something we've had builders ask us for this for 20 years. And it prior to, AI generated underwriting, it was really impossible. You could have people that would pick up a phone, but they couldn't really tell them anything. They'd say, well, I've got great credit. That doesn't really mean anything. They could be a 710 and think they're great, or you just don't know. But now with the quick underwriting process, you can close a loan in the home. So it takes a lot of the guesswork out of it.
Yeah, no, thanks, Greg. And that's a great segue to our next topic is understanding the customer experience with pool financing. When your customer applies or before they apply, you as the pool company, you want to know what is exactly is my customer getting into? What can they expect? What can I expect if they call me and ask me questions? Um, when you're looking at pool financing vendors, who you're partnering with currently or who you're potentially asking to partner with, you want to understand, hey, what is the experience for my customer? What are they going to expect? And every company works a little bit differently, but with us here at Viking, we kind of take it as we want to give your customer kind of that white glove experience. We want to match, and your financing vendors who you use should match the level of customer experience that you offer your customers. You don't want to potentially partner with someone who's going to, deny all your customers' applications, who doesn't answer the phone when someone calls, who's constantly, you send an email and it's going to take 72 hours to get a response. Your customers expect the best and you want the best because you ultimately who you use is a reflection of you and your business models. So what we do at Viking is customers apply, we perform a soft pull only, and that customer is getting an answer and getting a call from a representative, usually within 1 to 2 hours. We will call that customer and say, Mr. Customer, we've received your application based on your credit. Here's what we can offer you: interest rates, terms, payments. We'll go over that with a customer and answer any questions that they have. We'll also go a step further. Say your customer applies, but we can't help them. We'll still reach out to the customer. Say, hey, Mr. Customer, I see you've applied for a loan. We really want to help you and see what we can do to work together to get you financing. We are looking at your application, and due to debt to income ratio, looks like we're going to need to add a co-applicant. Is there a spouse or someone else in the home who we can add to this application? We'll try to take it a step further to actually get your customer approved. So that way, ultimately, we explore every option we can for that customer. You also want to look at financing vendors who cater to what I would call a wide variety of credit customers. So some companies have really great interest rates and terms for excellent credit customers. But what about the average customer? With average credit scores of 680, 700, your financing vendor should be able to cater to all your clientele, not just good credit customers. And that is one thing we at Viking excel at, is that we want to offer options for all types of credit customers. Ask your financing vendor, hey, what about my self-employed customers? What about my customers who have, multiple income revenues? Maybe they own rental properties. They don't have a traditional job. Do you have financing options for those customers? Depending on your market, your consumers best and what you see and what you hear from your customers. Make sure you ask those scenarios of your financing vendor to make sure that they have options for you. Ultimately, the better the experience is up front for financing, it just sets the tone for the whole project. Customers going to feel loyal to you for offering this financing vendor, actually giving them a viable option that was painless. And it's just going to set the tone for really a smooth process from literally start, dig to finish for the pool. Now, we've talked a little bit about the customer, what the customer is going to experience when applying. It's a soft pull only, same day calls, same day decisions, loans close within a couple of days. Now, let's talk a little bit about you, the pool company. What are you going to experience in your day-to-day in dealing with a financing vendor? Every vendor's different, so it's best, to schedule, contacts with your account managers, your reps at these financing vendors, really just to understand changes and day-to-day. So I'll go over in general what you can typically expect when dealing with pool financing vendors as the swimming pool outdoor living company. I believe the biggest, or I believe is the most important factor for our partners that I deal with day to day, communication is the absolute most important. As a pool company, if you're on the road, if you're handling design appointments, if you are dealing with customer complaints or job site issues, you want to be able just to pick up the phone and say, you know what? I need to call Viking. That customer, I think they're approved, but I'm not sure. I'm going to give them a call. You want to be able to call someone, have them pick up the phone and actually give you an answer right then and there. You want a pool financing vendor who's actually going to be what I call accessible. Everyone can say, hey, I've got great customer service. We have a lot of employees. We're online all the time. But if you can't actually get through to anybody, then there's kind of no point. So we pride ourselves on being what I call accessible. All of our partners have direct contacts and account managers. So if you have questions, you can call the general office or you can call your account rep. Call, text, email. We pride ourselves on being accessible and getting you the answers you need within so many minutes, just so that way you can continue to do your day-to-day and focus on what you do best, building pools and selling pools. So day to day, if you have questions on a customer, hey, has my customer applied? How much are they pre-approved for? How long is until their loan closing? Make sure that you're working with a financing vendor who's going to be accessible and answer those questions for you as quickly as possible. Also, in terms of expectations, the most popular question I get is, all right, well, how does this work? How do I get paid? Every financing vendor is different. They all have different lenders and banks that they work with, different operating procedures. We at Viking, we have several different options. As I mentioned earlier, a lot of what we offer is staged funding. So that is where you, the pool company, get paid directly in stages throughout construction. We have several different options, and each one varies based on the lender that we're using for your customer. Most lenders pay in multiple stages throughout construction. Some lenders pay you per your contract. Some offer up to 4 draws. Some pay in up to 2 with my secondary lender we use. So there are different options and they can be kind of catered to that specific project. Whether you're building gunite or concrete pools, fiberglass pools, or liner pools, our stages are going to be adjusted to best meet your particular needs and the type of pool that you are building. So in terms of day-to-day, just to recap, what you can expect in dealing with a financing vendor and what you should look for in a financing vendor is accessible communication, flexible funding that meets your needs and the needs of your customers, as well as just someone who's going to be a true partner for you and your clients during this time. So, Scott, would you like me to go ahead and address some of the questions that we have with our participants? I've seen a couple from Kyler and Janet. Would you like me to go ahead and address those live?
Yeah, that would be great.
Okay. I'll go and address some of these live, and some of these I see we'll get to those here in a little bit. All right. I'm going to go ahead and answer Alicia's question regarding more information on self-employed customers. So with a finance company and financing in general, I'll talk about that. If you're a consumer self-employed, I'm going to be honest. You all are business owners too, and you probably see this. You're self-employed. Sometimes it can be tough to actually get any sort of loan. If you're self-employed, you're having to provide personal and business tax returns. You're going to provide bank statements. You're going to provide quite literally an arm and a leg in information to try to get financing for traditional methods. And then sometimes you'll provide all that and lenders still decline you because they're looking at the bottom line of tax returns and say, oh, well, you didn't make enough. We're not going to approve you, unfortunately, at this time. So we at Viking in particular, we have a lender we work with for self-employed customers. It is essentially a stated income loan program. So what that means is as long as your customer has decent credit score, they have decent credit history as well. So no recent derogatory remarks, bankruptcies, things of that nature. We can get them approved without having them to provide any sort of income verification. It's a great way for those customers who are self-employed, they're business owners themselves, to be able to apply and still get a loan. Most traditional pool financing vendors want all the documents I mentioned a bit ago, tax returns, bank statements, all of these things. But we have a really seamless option for those customers. Again, based on credit score and history, as long as everything looks clean, we have a stated income loan program and we can get them approved for financing. And typically that loan option is a loan of up to $150,000. And then because we were just talking about day to day and what to expect, I'm going to answer Bubba's question regarding stage payments. So there's a few different lenders in particular that we work with. And again, being kind of evergreen across the board, every finance company is different. So when talking about payments and how you get paid, definitely ask them, hey, here's the type of pools I build. Here's my average job size. How do I get paid? For us, we have a few different options. The option is going to depend on your customer and who they are approved with. I have different lenders that cater to different types of credit customers. My main lenders for your average to good credit customers, you'll be receiving payments in up to 4 payments with one, or get paid per your contract with the other. So you can request as many draws as you want. So you can get paid per your contract and request multiple payments. It's ultimately just going to depend on the lender and who your customer is approved with. Again, we offer several different lenders to cater to different types of credit customers and backgrounds, ultimately to get them approved. That's our main priority. But yes, you can request multiple payments throughout construction with most of our lenders, even matching your contract with some. I'll answer another question from Alicia, since we were just talking about payments. She asked what percentage of the loan is typically held until final inspection is passed. So final payment, let's talk about that. Because in my experience with staged funding, you're getting paid in stages throughout construction. The customer is all happy and great. And then by the time you get to the end of the project, oh, something's wrong. Customer doesn't like the fact that this paver is cracked. They don't like the fact that this tile looks differently colored than the other ones. There's all kinds of things that come up. So with most of our lenders, you have options to get payment. I like to cater it towards your contract. So with most of our lenders, you request final payment, I say day of plaster or even at pre-plaster or prior to decking or, before that final step, so to speak. We have a lot of our lenders cater to that simply because they know that customer is always going to have a punch list item. They're always going to, be concerned about one little thing. And that one thing shouldn't hold up the entire payment. So with us, with traditionally speaking, most of our final payments are processed what I call day of plaster. for a gunite or concrete pool, and then a day of decking if it's a fiberglass or liner pool. So we don't have to wait for final inspection. We don't need reports, none of that. In most cases, we just need you to email us or send us a picture, and that's all we need to process final payment. But in terms of percentages, if it's a percentage, it's usually anywhere between 10 to 20%. It just depends on the lender. But again, it's not held until inspection. It's held until either pre-plaster, day of plaster, day of decking. We try to cater it towards your projects and what exactly you do. So for the next couple of slides, I'll take a break from Q&A and answer those here in just a little bit. But I want to talk a little bit about benefits for you, the pool company, and who you're using to offer financing. What benefits are there for you? What tools, what resources do they offer to actually help you offer and sell financing? Several of you sent me Q&A questions about that, so I'll go over that a little bit. One thing that we at Viking have is we have what we call loan status. So it's a loan portal where you can log in and view all your applicants and view who's applied, who's approved, who's denied, canceled their application. It's a great tool that you can use while you're on the road or your team, just logging in and viewing updates on customer applications. Again, we talked about communication earlier. That's a huge, huge deal to most of my partners. And I talked about being accessible. You know, if you have a question, call, text, email. This is another method that we use to be accessible and give you real-time updates on your customers and their applications. Other benefits and marketing resources that you should be getting from a financing vendor. The main thing that I promote is co-branded materials. It creates a sense of loyalty with the customer. You know, if a customer is looking for pool financing, it's a daunting task. Many of them have never had a pool before, so they're shopping you. They could be shopping other pool companies. Now they need to go look for financing. They've got all kinds of things going on in their heads right now. So if they go to your website and they click on the financing page and they see a link for pool financing and it has your company name as well as the name of the finance company. In the sense of the consumer's eyes, they're like, oh, wow, okay, so they're actually partners. This guy's legit. I'll go ahead and complete this application, start getting pre-approved. That's a great benefit because it makes, obviously, you look good because you've done the homework and you have financing vendors to offer your customers. But it creates that sense of loyalty and that's kind of that sense of comfort with the customer. They don't feel like they're just going to random websites and applying for financing. They're actually using a vendor of yours, almost like an extension of you. So that is one benefit. You want to have custom literature and collateral. So obviously online application links, digital items, your financing vendor should offer. We at Viking have all of that. Many of the Q&As you were asking about, you know, brochures, signs, graphics for a website or social media post. We at Viking, we have all of that. It can simply be downloaded off of our website if you just need graphics and resources to plug and play on your website, or if you want something co-branded. We are more than happy to do that. Our marketing team is here for you. So send us any requests that you have, and we do that on the daily with many of our partners. So your financing vendor should provide you co-branded collateral, online application link, physical flyers as well. Again, talking and going back to passively promoting financing. I mentioned digitally some ways you can passively promote it, having it on your website, posting about it on your social media accounts. But if some of you still use like folders where you're presenting to a customer, meeting with a customer, and you have all of your vendors' flyers in a folder, your financing vendor should also be providing you literature for those folders as well. So that way you can put that in there and the customer can look through it and apply kind of at their leisure. Those That literature can be co-branded as well with your logo, your company name on it, even your pictures. I have some of my partners who have award-winning pools that they've are in magazines and that they've spent a lot of time and effort on. If you want us to use those pictures for you, we're more than happy to. So your financing vendor should be doing everything that they can to help you and sell more pools. And that's co-branded literature is just a great way to do it. Um, so those are some of the benefits that, you should be getting out of your financing vendor. And if not, give us a call. We're happy to help and go over that with you and what we can do to be that financing partner for you. So that should answer Kyler's question on brochures, Alicia's questions too, links for emails and websites. Two more questions came up. Monday asked, do you finance landscapes without pools? Is there a minimum? Yes, we can finance landscaping, hardscaping. We can finance anything other than the pool as well. Typically speaking, loan minimum is about 10,000 with us. That is one important question to ask financing vendors. If, like I stated earlier, if you have multiple services that you provide, not just pool construction, but landscaping, remodels, hardscaping, find out what the loan minimums and maximums are. For us at Viking, loan minimum is 10,000, maximum is 200,000. So it's a pretty wide range that we can cater to for your projects. And then that also should answer your question, Bill. Do you offer financing on pool remodels, hardscapes, softscapes? Yes, we can. So we can finance the pool and those items, or we can just finance them by themselves. Say customer doesn't even want a pool. They just want a patio, fire pit, outdoor living area. We can finance that. Say you're building a pool and they want those items. We can finance it all together. Say they already had a pool built 5 years ago and they're a repeat customer and they're saying, hey, can you extend my outdoor living area? We can do that too. So we can cater to all of those projects as well. And then another question by Janet. Is their interest rate based on their credit score? Interest rate is going to be based primarily off of credit score, but also off of credit history and income. So it's going to cater or be based on a couple of different factors. In my experience, you could have two customers with a 700 credit score. One customer may have a 700 credit score, but also have a lot of late payments, delinquencies. They may even had a charge off a few years ago. And then you also have a 700 credit customer with, a couple of credit card loans, maybe a past mortgage, but their credit history's clean. They've made all their payments on time. It's the same credit score, but two different types of customers. So credit score is important, but lenders and financing institutions, they're look at history, credit history, as well as income as well, and ultimately providing financing for that customer. All right, so looking through the chats, I think oh, one more question from Monday. What do you need besides a contract? Do you need the design? For a loan closing, what we need from you, the pool company, in order for when a customer's applied, they are approved for a loan, and now we want to get them to finish line. They need to sign loan documents, and we give you a clear to start saying you're ready to start. The only thing we need is a copy of the pool contract because we want to know what exactly we are financing. That can come from you, the pool partner, or the customer can send it to us, whatever's more convenient. Many of my partners, they'll email me and say, hey, Sarah, I know this customer's applied with you already. He just left my office 30 minutes ago and signed a contract. I've attached the contract for you. That's perfect. We'll call the customer, verify final numbers, and get loan documents out. So The contract can be sent from you or the customer, but that's the only thing we need. We don't need design, permits, any other documents related to the project.
That is very impressive. I have just two or three more questions that we have time for, and then we'll wind things up. One question was, it is pretty straightforward. How do your interest rates compare with your competitors?
Sarah, I'll
Greg,
go ahead and yeah,
you
I'll
want to
take
take
this
that,
one.
Greg?
Yeah, I think generally speaking, they're all almost the same across the whole spectrum of credit. So you may see, you're going to see low teaser rates at one place saying, rates as low as, and maybe that rate is lower than ours sometimes. Sometimes ours is lower than theirs. But if you look at like a bell curve of credit scores, you've got your kind of meat of the order in that 700 to 820. And then you've got sort of the tails of your kind of rougher credit on the bottom end and your, 840s and 850s and stuff like that that are a small part on the other end. So at the end of the day, these loans are all kind of getting pooled together. And that whole asset class of all of those loans needs to have a weighted return that fits these investors' guidelines. So if somebody's giving it away a little bit at the top, they're making it up somewhere else. So if you're offering a very low teaser rate at the top and you're putting some people in a kind of a loss leader, they're not living off of that loss leader. They're getting more out of the 740 guy or what have you. Um, I think, I've seen it come and go over the years. We had somebody out there not too long ago offering a teaser rate for 850, which is the highest credit score you can get, which is kind of crazy to me. But I think all in all, rates are about where they should be too. I think, like we mentioned earlier, the low rates, the 3% and things like that. I think traditionally where rates are where they are now is about where they ought to be. And I think our rates compare favorably. They definitely compare favorably to every bank, credit union, place that you can kind of go to on your own. And also the terms are different, the 20 and 25-year loans, things like that, 15, 20, 25-year loans. Those aren't typically available to people kind of walking in off the street to their bank. So the payment's going to be a lot lower. But I think no matter where you went, if you looked at, 50 borrowers you sent over there and blended all their rates together, I'm going to guess they're almost all exactly the same. That would be where I'd say we're at on it.
I think we've got time for two more. Next question is, can we get a loan approval while in the home?
Yep, and we just kind of went over that earlier. Yeah, if you call in, not all the time, but like I said, there are several, and as we grow, we'll be adding more loan consultants, and that'll be increase the odds that somebody's picking that call up. But for now, I'd say you're at least a coin toss or better of getting somebody live even at night or on a weekend.
Sounds good. I think this is the last one we've got time for, but I did want to mention that if we didn't get to your question, we can get to them directly by email after the webinar. So the last one is, my customers primarily pay cash. Why should I offer financing?
Yep, this one's another. I always say that the customer you lose over not offering financing or not selling with financing, you often, most cases, don't know that that's why you lost them. So if they're kind of, if you're not talking about financing and it just doesn't come up in your presentation at all, and you don't kind of point them in the direction of someplace that can get them a loan, they're going to shop on their own, and they're in a lot of cases find out that the traditional spots they're going to are not going to help them. They've got rental properties, they're self-employed, they own a business and take a lot of cash. They've got, a mother-in-law living at their house that pays $2,000 a month in rent. There's so many explanations for income that are not going to fly at their bank. And when they get declined, they're kind of looking at a luxury item that it's I think, a point of pride to be putting a swimming pool in and buying that size project. So when they get declined, I think in most cases, they're not going to tell you that they got declined for a loan. They're probably going to tell you they're either going to ghost you and disappear, or they're going to probably tell you that, they're putting this thing on hold. Somebody's got a medical problem, something. They're not going to tell you we couldn't get a loan. And I think that there are a lot of people out there that are in that boat. And at least if they come to us, you'll know that they could get a loan. Then you can kind of take it from there.
Okay, I think that'll do it for today. I want to thank you, Sarah and Greg, for that informative hour. I learned a lot about financing. And I want to thank everyone for coming to the webinar. I know everyone's got a lot left to do today, so I guess we'll all get back to the pool business. See you next time.
Thank you so much.
Thank you.